Well friends, welcome back to the next video. Today I would like to show you my best swing trade in 2025, which was an extraordinary long trade in Euro USD. After this video you will exactly understand on how I understand the market in a swing trading manner and how you can transform your trading as well through my exact step-by-step process. I structured this video into 3 different parts for this trade. First of all, I start by explaining the COT data, then we go on with the seasonality, and finally I break down how I technically achieved a very good CRV to execute the trade on. So let's start with the first picture. First of all, you have to understand what is COT data. COT data is the positioning of the biggest market participants. That means that you can see with this data where the institutions are positioned. It's important to mention that this is not a timing tool, okay? It only does work as a timing tool in a consolidation. But in a trend, it's not for timing, it's to understanding the underlying factors that drive the market and the price. So here you can see this graphic down here, and you can see if we are trading below the red line, we are bearish, so the commercials are positioned bearish. And if we are above the green line, that means we are bullish positioned. In the next slide, you can see that the commercials in this certain environment in 2025 were heavily bullish. So they were buying heavily the underlying asset, which is the euro. And they tend to do this in a sell trend, in a downtrend, right? In a downtrend, they are just selling the market. You can see this here. This is the downtrend, and they are just buying the market. And in an uptrend, they start selling the market, which is very important to note. So they start building the next price move before it even happens. So they're positioning themselves, and as soon as they stop the past behavior, the momentum is going to switch and price is going to reverse. Now, as I saw that opportunity that the market is presenting a lot of bullishness in the commercial space, I started to look out for a change in their behavior. And this happened just before April hit. Okay, in this candlestick here, we saw, okay, now they stop the bullish hedging to now engineer the bullish price leg and hedge against it to engineer the next bearish price leg. Okay, they start heavy selling, and this is your sign that you can now look for an opportunity to swing trade into the longs. Now, as I had the sentiment bullish confirmation, we have to go to step number 2, which is analyzing the seasonality. Now, seasonality is pretty simple to explain. It's just an aggregated view of the market over the past 20 years. And you can have a look of your own on marketbulls.com and then go to the seasonality tendency tab. And then you can see this picture. Here you just want to check the 20 years average. So now you can see over the past 20 years, the euro tends to be heavily bullish in April. Now, this is a zoomed in look on April in the euro. Okay, and you can clearly see it's just bullish, bullish, bullish. Now, what I would like to do is not just trading the euro bullish based on seasonality, but in combination with the sentiment data, fundamental drivers, and my technical edge, I can definitely look for a strong bullish trade. Now, after coming to this context of the fundamental data that we now have to understand, after we confirmed it, what is the technical view of the market. And if you look at the technical view, it's pretty simple, it's pretty obvious. You can see in the trend we had a 4-hour breakout structure. So now you can use whatever technical analysis step you use and just bring it into context with the sentiment data and the seasonality. And then I searched for an order block. An order block is my preferred way of entering a trade with a breakout structure, which is optional. I just need a supply demand, so an order block, whatever you want to call it. So an order block, but this is not a normal order block. This order block now has the fundamental context. If you just now draw an order block on the chart, there's no context behind it. My order block is binded or molded into the fundamental context of the market. Now, we just have to wait for April to arrive. As soon as we hit April, we have the bias of the seasonality and the confirmation of the sentiment to perform a long trade. Now, what happened? The entry happened as soon as we hit April. 1st of April, you can enter the trade. The stop is directly behind the demand zone. So the stop loss is based on my technical view of the market. And my target is this major swing high. We just changed the whole sentiment direction here. So here we had bullish sentiment, right? Here, they engineered the next price leg, as you saw on the top slide. I go back to it. They engineered, in this downtrend, they engineered the bullish price leg. So I know that they were hedging bullish. And if we change here, now you can know what? Now the bullish price leg will play out and they will start immediately hedging against it to engineer in the future a short leg. And this was the first sign. So this is not a normal breakout structure. It's a breakout structure confirmed by the positioning of the institutions. And as soon as my order started to take on traction and move to my target, I moved my stop loss to break even right there as soon as we hit 50% of the target, and the sentiment stayed the same. There was no fundamental driver that could reverse my trade in my point of view. So I held the trade above the high and I hit this target. And that's all for today's video, or from this trade breakdown of Euro USD. I hope you enjoyed it. See you in the next video.